What's going on, guys? Welcome to this short video where I'm going to break down yesterday's 1 to 6 but ended up being a 1 to 15 gold trade. I want to break down the thought process behind it and why I was expecting this from Monday. However, if you want to see a more in-depth breakdown of pre-analysis, so you can see that I'm not lying or being like, yeah, I'm just using the trading view, the video Monday here, I'll put the link above. We broke this trade down what I was expecting to the pip practically on Monday. Just like last week, we predicted price action perfectly all week. Just like this week, predicting it all week perfectly again. So I recommend you get in the VIP, guys, if you're not in there already. So let's go back to the chart. So I've been bullish on the dollar ever since we got this break of structure. Well, change of character, sorry, at first. Change of character here. And then we've got a bullish pump there, and we've got to close back above this resistance. And then everything inside this zone here was bullish for me on the buys. Until we break this low here or we get a daily candle close here, I'm not looking to short this. I might take some, intraday or scalp sells from support and resistance levels, but overall, higher time frame, I am bullish on this. I might take some sells up here depending on what we get on the lower time frames. But anyway, if we go down now to the 4 hour, I'll give you a quick overview here. I won't cover everything. We've been trading this. We've been trading this leg here. We traded this leg here, all in the group, guys. All broken down on the videos week to week, which you can go watch. But my main focus on yesterday's trade and this week's trading, was we broke structure here. Look, we had a 4 hour change of character. So what's that? We've got the 4 hour and the daily bullish. So we want to line these time frames up as much as possible. Higher time frame to lower time frame. The more we can get the time frames aligned and get price into a better position using these time frames, the higher probability we've got of our patterns playing out or our liquidity grabs playing out or however you trade playing out. But the most important thing for me is trading with order flow and matching up the time frames. So here we had a 4 hour change of character. We had a 4 hour break of structure. So now we're super bullish on daily and the 4 hour. So we got a break of structure here, look, and then this for me, every time I see a break of structure, I always look for a flip zone, support turning into resistance and resistance turning into support, etc. So this resistance here was broken, and then you see price coming down here, and I was looking at these candles, and look, these candles here, low volume candles, you can see this is creating liquidity here and getting ready for that pump up. So what I used here, look, is I used the previous supply and demand zone. So we broke resistance, I had the previous supply and demand zone here marked up on the lower time frame. And I was using this for my zone for the wicks to enter. So when I saw the liquidity grab in here, which lined up with the New York open from, the New York session from, was it Monday? Yes, I'll show you in a minute on the lower time frames. That was me. That was the market then showing me its hand to then go up and break this trend line here. So we've got the change of character. We've got the 4 hour break of structure here. So structurally, we've got the higher time frame on our side looking for buys. We've got the lower volume candles coming in here, creating liquidity. Look, fake out candle there, instant rejection, wick down into previous supply zone that's now turned into demand. So if we go down, that's structurally from a high level, higher time frame perspective. And if we go here, what we can see with our session indicator on, I was waiting for this liquidity to get wiped here. We entered this trade here and took a push up to the top. So if we look on this, look, we was here. We low of the day was swiped. Again, look, you see this setup play out over and over again. So low of the day was swiped here. Once the low of the day was swiped, we broke back above structure because we had a momentum line here. Look, that broke, faked out. We closed back above here. Once we closed back above this zone here, clear rejection. That was the market showing us its hand there to go test the highs. And look, we went and tested the high. The high's right here. This was previous weekly high. And look, it tested it to the pit, but it created an equal high. So we had liquidity up here. So creating liquidity there, that liquidity is going to get taken. So that's another factor for me of we're going to break these highs. And then when I saw price doing this, like creating liquidity here, look, we've got look at the volume in the buys compared to the sell candles here. Big explosive candles, then we've got this slow ranging price action here. Then we've got this liquidity here, which lines up just above a previous supply and demand zone. And then we get the liquidity swipe, look, candle close back above where the liquidity was swiped. Bam, bam, look at that. Engulfing candle here. There, from an hourly time frame perspective, was your entry. We actually entered on a lower time frame perspective here. Actually lower. I was waiting for a pattern to form. I got a head and shoulders. Let me switch the indicator off. There's a lot going on here. So we got head and shoulders here. I entered a little early, but then I added some positions here also. Once we got the confirmation here of the break of the neckline, you see we only took a tiny bit of drawdown here, 10 pips of drawdown overall. I was a little bit cautious on my other accounts. I was swinging this. I did put my stop loss here because I thought we might have got a wick into this imbalance here to fill this imbalance before we went up. So I wanted to just be more cautious on my swing trades. So I opened up my TP from here to here. So the lower time frame TPs was like here to here and then here to here. But I was expecting this move anyway, regardless of that head and shoulders pattern. Structurally, from what I explained on that using the higher time frame price action, we can see here once it broke, look, was consolidating in here. And when price is doing this, and you get the fake out liquidity into supply and demand, flip zone, New York liquidity swiped, engulfing candle, head and shoulders, breaker structure. Come on, that's the market right there showing us it's exploding. It's going to explode through that trend line. So I use the dollar as an opposite correlation here. I explained this in the video. So what I saw here, look, is we're in a higher time frame channel. And normally with a channel, price tends to range up and down, up and down, up and down. So after this tap, I'm expecting price to then go and tap the low down here. Now, if we take out the daily low here, if we get a daily close down here, then I'm expecting the dollar to start falling. However, it does look like we're creating some sort of flag pattern here, and flags do have a higher probability to break out to the upside than fail to the downside, only slightly, like 60 to 40 or something like this. So what I'm waiting for here, we take this level by level. This is what we do, guys. So many people predicting, oh, this is going to do that. No, it's not. We just look at it logically. Price can only go two ways, and price moves up and down in sections. So we move from this section to this section. We move from this section to this section. If this section fails, we move back to this section. That's how we trade, section by section by section. But then we use the higher time frame or 4 hour or 1 hour points as our anchor points, and then we trade in between that on the lower time frames. As I just said there, if we've got like a breaker structure here, look, and then we've got previous high and low here, but on the higher time frame, I'm expecting it to bounce here. I'll be looking for price to come up and break the lows again, following order flow there. Lower high, lower low, lower high, lower low, down to the bottom of this trend line. And here, we're going to get a big fake out, guys. I said on Monday. And if we get a fake out here, as I said here, on Monday, this was hit up here on Monday. And I said we're going to break this because we already had a breaker structure on the 4 hour on gold. We was already up here. And I said we're going to consolidate, which we did right here. As we broke through, we consolidated here. This created the push on gold, then we consolidated. And then, as we had the second push on gold, we pushed through here. And I don't want to keep you too long, but I broke all this down on the Monday video, guys. So if you want to go look through there, you can. You can see how we work on these pairs. And if you're not in the VIP, guys, I highly recommend you get in. You know, I give you these breakdowns, high time frame to low time frame, using laser precision for entries, and I give you a lot of value, guys, a lot of education. So I highly recommend you get in there. And as I say, if you've got any questions on this video, you know, post them down below. And that's it, guys. Get in the VIP or get in the free group if you haven't got VIP money. Build your capital, then get in the VIP group. So that's it for me, guys. Trade breakdown. Enjoy. Have a good rest of your trading week. Peace out.